everybody, it's Lisa Harper, and you're listening to the Not Ready Yet, Curating Conversations for the Aging Journey podcast. This is the show that hopefully changes how we have conversations with our loved ones that are aging and about those life decisions and transitions later in life. Today, we are talking with Michael Pankow, a seasoned mortgage professional with over 20 years of experience. As the CEO of Veterans Mortgage of America and president of its reverse mortgage division, he brings a wealth of information. He has a proven track record in sales, operations, and leadership. A U.S. Army veteran with 12 years of service. Thank you, Michael, for that.
You're
And
welcome.
Michael is also an entrepreneur and has ventures in aviation and films. He's licensed in all 50 states, and he holds his CSA, which is the Certified Senior Advisor, and Aging in Place Specialist credentials, which is to me demonstrates, and to everybody he serves, that he has a commitment to veterans, seniors, and their families. And so, Michael, I welcome you today. I thank you for being here with me. This is just such a huge topic. I think people have a lot of confusion around this, so I'm hoping here we can clear up some of that confusion for those that are listening.
Yeah, for sure. Thank you, Lisa. Honored to be on your show.
Thank you. What is a reverse mortgage? How about we start there?
Yeah, the most common question, right? So a reverse mortgage, it works in reverse. We'll start with that at a high level, right? But a reverse mortgage, in its simplest terms, it provides the senior, age 62 and above, with the opportunity to tap into their equity of their home tax-free. Also, with a reverse mortgage, unlike a traditional mortgage where you actually make a mortgage payment every single month, with a reverse mortgage, in many cases, you're actually getting a payment. You're actually receiving a paycheck, right? Meaning you're receiving tax-free equity from your property via the line of credit. So it works in total reverse. But what I like to say about a reverse mortgage is that it's a sustainable product for seniors to really help them age in place and manage those later years.
Great. And so what makes it special as far as taking that equity out? What do you see a lot of people doing with that? And what are the qualifications?
Yeah, so basic eligibility, I'll get into that real quick, is you got to be 62 and above for an FHA reverse mortgage. That's 62 and above. Has to be your primary residence. It can't be a vacation home. It can't be a second home. It can't be a rental. It has to be where you live, your owner-occupied residence. That's a requirement by FHA. It's an owner-occupied deal. Just like if you did for a buyer, when you represented a buyer and they buy a home using an FHA loan, it's got to be an owner-occupied deal. This is an FHA product, right? Last but not least, they also have to pass a financial assessment, right, which we can talk a little bit about that later. And they have to also attend a HUD-approved counseling. So they've got to go through about a 35 to 45-minute counseling over the phone, so it's not intrusive. They don't have to go anywhere. And it costs anywhere between $150 to $180. They can do a free counseling through some of the other services, but most people like to get the counseling done more quickly, and so they go through the HUD-approved counselors. That it's a requirement. So again, 62 and above has to be your owner-occupied residence. You have to get through the HUD counseling, which is 35 to 45 minutes, and you have to get through the financial assessment, which really just looks at 3 different buckets, which I won't get into today, but you have to get through the financial assessment. And most people do pass the financial assessment. That's usually not too hard.
Okay. And so there are some checks and balances, and the education portion of it is, to me, that's why I'm here.
For protections that are in place with a reverse mortgage, and again, depending on how much time we have today, I think it's one of the best products out there. And the HUD counseling is there for 3 reasons, and I'll just get into the counseling just to prove this point. A, it's to make sure the senior has the cognitive ability to understand the reverse mortgage product. B, to make sure there's no elder abuse going on, that there's not somebody behind the scenes pushing that senior to get the reverse mortgage to get access to maybe some of the equity in the property. And by the way, disclaimer, my mom has a reverse mortgage, and I'm going to talk about her a little bit because she's exactly the type of individual that, thank God we got it for her going back to last year, because she broke her femur the week before Christmas. Now she's back home, and she's going to be tapping into that reverse mortgage, A, to have in-home care come out and visit, and B, to make some more modifications at the house so that she can continue to age in place. So, but the last thing is that the counseling, there's 3. So there's cognitive ability, if the senior understand what they're getting into, to make sure there's no elder abuse, and then lastly, to make sure myself as the mortgage professional, that I'm educating the senior and I'm doing my job. And that counselor actually can see the transaction on their computer, because we provide them with a code, and that code gives them access to the transaction so they can ask contextually relevant questions to the senior to say, oh, do you live at this address? Oh, is your home approximate value this? Oh, did Michael share with you that, or did your loan officer share with you, you're going to get a line of credit of about $150,000? And as long as the senior's understanding all of that, right, because I've educated them, I've walked them through the proposal, then they'll get through the HUD counseling just fine. But that's why the HUD counseling's there, and that's why we consider it as a consumer protection.
Great. Well, that's wonderful to know, to have that level of care. I always say we're about skill, obedience, knowledge, and how we are able to translate that and help someone else understand it.
Yeah.
You know, as experts in the field, that is,
Right.
you can have an expert and somebody that is not able to relate that information to someone, they're not understanding.
You know, one other thing I'll say about a reverse mortgage is that a reverse mortgage is a non-recourse loan, and you've heard me say this before. It's a non-recourse loan. And what does that mean? And this is, again, a consumer protection for the borrower, for the heirs, and for the property. It means that the borrower or the heirs will never owe more than the value of the property. They'll never owe more than the value of the property. So if, you know, we have some early adopters, right? You know, Tom Selleck's been pushing reverse mortgages for 20 plus years. And so we got some people said, I like Tom, I'm getting a reverse back in the 80s. And so they may be upside down because, again, a reverse mortgage, the loan amount goes up every year versus with your traditional mortgage, it goes down every year. And so if they've been on that reverse mortgage for 25 or 30 years, there's a chance that they may owe more on the reverse mortgage than the value of the property. Well, FHA, through the non-recourse feature, what that means is that they only owe what's the property value is. So if their loan amount is $400,000 and the property value is $200,000, well, they're upside down by $200,000. That would be a short sale, right, in our industry.
Yeah.
Well, guess what? It's not a short sale. So in the reverse mortgage space, the heirs and the borrower never owe more than the property. So if the borrower passes, God forbid, and the heirs inherit the property, they can sell the property, they can walk away from it, they've got options, they can sell the property, or they can buy the property, right, for the value. So again, these are a deeper dive conversation, but again, the family or the borrower never owe more than the value of the property. They'll never have to make up the difference between the loan amount and the value.
And I think that's a huge thing to clarify, and because there are myths out there and fears
Yeah.
out there
For sure.
about that, and it always has to do with whose name is on the deed, who owns it at that point, and how
Yep.
much are we going to owe after. And people, I think there is a real fear what the public understands reverse mortgages to be. And so there's a
100%.
built-in safety net for families knowing that.
And I think we'll get into it later in the conversation today, but we'll talk about the 4 different ways that the heirs, right, can move forward with the property in the event that there's what we call a maturity event where mom and dad are no longer in the property, whether it's death or they move into a full-time care community. But they have 4 options. And so again, the consumer protections with this product are, as far as I'm concerned, they're the best in the industry.
Wow. The whole reason this is called Not Ready Yet is because people don't understand the options available to them, so they don't make decisions. And when I hear somebody say, we're not ready yet, I dig deep. What does that yet to mean to you? Where do you need more information provided to help you make a decision for your
Right.
family? And it's
Right.
all about getting information. Do you want to segue into the myths?
Sure,
And
yeah,
the
because
facts
that's,
about that? It kind of seems like
yeah.
a natural segue.
Yeah, absolutely. I mean, once
Okay.
we get done with the myths today, and and your listeners understand the facts, they'll know 90% more than the average individual about a reverse mortgage,
Yeah.
right? And that's the benefit of what we're doing today. So myth number 1, I think, how do you want to start that? It's
The one I hear a lot is you don't remain on title.
Yeah, that's a big one. Absolutely not. That's not true. You remain on title just as if you own the property free and clear, or if you had a traditional forward mortgage on the property. You are on title. You are the owner of that house. The bank does not own your home.
Okay. They're expensive. Reverse mortgages are expensive.
So I would say yes and no. When you look at the consumer protections, when you look at what you can achieve through a reverse mortgage, and I'll use my mom as a quick example of that, but the longer you have a reverse mortgage, the less expensive it gets. The most expensive component of a reverse mortgage is the upfront mortgage insurance that's paid on every single reverse mortgage, with the exception of a refinance reverse mortgage where you're doing it again and again, right? But the upfront mortgage insurance is 2% of the appraised value, or the max claim amount, but we'll stick with appraised value. So if your home is like my mom's reverse mortgage. My mom's home was $700,000, the value. So her upfront mortgage insurance, which was taken from the loan, she didn't have to write a check for that, it was taken from the loan, was $14,000. Okay? But that $14,000 gave my mom access to $300,000 in a line of credit, which is not taxable. No one can ever take it from her, and she can use it for whatever she wants, and she never has to make a payment on it.
Okay.
My mom's 77 years of age, so she's got another 15 years, hopefully more, right? So if you take that $14,000 and you amortize that out over another 15 or 16 years, yeah, it's about $1,000 a year for the upfront mortgage insurance, but you get the non-recourse feature, meaning my mom or myself or my sister will never owe more than the value of the property, okay? She gets access to all that equity, never has to make a payment on it. I mean, the list of benefits goes on and on and on and on. And like I was sharing with you before the show, my mom broke her femur, and now she can access that line of credit, and she doesn't have to worry about making a payment on it, right? Think about the peace of mind the insurance policy she has now, $300,000, where she can have somebody come into the house 4 days a week, 5 days a week, 2 or 3 hours a day to make sure my dad and her, who are both now on walkers, which I never think I'd see my parents that way, they're both on walkers. My dad's 10 years older, and she's got a broken femur, but she's got access to this line of credit through the reverse mortgage, which again, she doesn't have to worry about ever making a payment on, right?
And
So
not worry about the solutions,
right.
when something like that happens and you go from your daily life of what has existed for many, many years to all of a sudden, I need these modifications. We don't have a main bathroom on the first floor. We don't have a zero entry into the
shower,
home.
yeah.
So, and the shower. So, to know that, that would take such a immediate relief. It wouldn't be, how are we going to do this? We know how. Now we just need to reach out to vendors and find some trusted people
Right.
to work with. Yeah.
Right.
That's huge.
There's a gal coming into the house 3 days a week to start, 4 hours a day. That's $35 an hour. How is that going to get covered, right? So, there's just so many reasons why. And I always say a reverse mortgage puts a moat around the property, the borrower, and their heirs because of that non-recourse feature and because of all the things all the consumer protections that are in place. It really puts a moat around them. So is a reverse mortgage expensive? Yes and no. It depends on how you look at it. If you had it for a year, it'd be expensive. But you have it like my mom's going to have it, or most reverse mortgage borrowers, you amortize that out, and that expense goes down every single year, right? Because it gets spread out.
I know a lot of people want to age in place. Both you and I are in that community, both CAP certified, to help people, this American dream that we have for people. And we told them, this is your savings bank. And and then a lot of people, when something happens, they think they need to cash it out by selling,
right?
And then find another option. But do you find a lot of people are using it for the home modifications and to stay in their home longer?
Yes, absolutely. Yeah, to bridge the gap financially, right? I mean, a typical borrower, because women, you guys get the benefit, you guys live longer. And so there are more women on a percentage basis that have reverse mortgages than men. And they're typically living on less Social Security because they were childbearing years, they weren't working as much, right? Or they weren't career focused for whatever reasons. We know that's changing now in today's society. But long story short, the typical, my typical borrower is, she's in her 70s and she lives in a 3-bedroom, 2-bath. She's single or widowed, and she's living on a $1,500, $1,600, $1,700 a month Social Security check, and maybe even working part-time still. And she's got a mortgage payment of $800 to $1,000 a month, and she's got $22,000 in her savings. So she's longevity risk is an issue where she's going to run out of money on her savings, and then she's going to have Social Security. And how long can she continue to work? So a reverse mortgage comes in, gives her a line of credit in some cases, not always, but it stops the bleeding with paying off the mortgage. She no longer has that $800 or $900 P&I payment, principal and interest payment, and that's a game changer for somebody that's on a fixed income. You give them back $800 or $900 a month tax free. That's a game changer. I mean, they can change. That changes their lifestyle, what food they eat, when they turn on the heat, when they turn on the AC, right? So it's a big game changer. So that's the typical borrower is, that female in her late 60s, mid 70s-ish, who is living in that home they've had for the last 25 years. They've still got a remaining balance on it. God forbid if they refinanced it here and somebody convinced them to pull cash out in the last 10 years. And we're just able to pay off their mortgage and get them out of that payment. But it's a huge increase to their monthly cash flow. It's tax-free because they don't have to make that mortgage payment. And it's a game changer.
There's a confusion of if they have to own the home free and clear.
Yeah. Yeah, no, it's all about being, there's a formula. So we take the borrower's age, we take what's called the expected rate, which is based on the 10-year constant maturity rate treasury, and then we take the value of the property. Those three things come together, and that'll tell us how much access to their equity or how much of a loan they can get from FHA, right, tied to that reverse mortgage. So for example, and I can do one for you right here, and it takes me hot 2 seconds, right? But let's say the home's value is $450,000, and let's say they're 75, and let's say they owe $50,000, okay? Because they've been in the property for a long time. Well, today that would give somebody, based on a $450,000 value, a $50,000 mortgage they needed to pay off, right? That would give them a line of credit of right about $112,000. Right, and then that would pay off that. It would pay off that mortgage. So that's a good deal. That's a really good deal for somebody. And my business partner, who's 78, he's got one as well, and he has plenty of money coming in from his tied to his retirements. But he thought, hey, let's get a reverse mortgage because I don't need to make a payment anymore, and I'll take a little equity out of the property, and I'll remodel my kitchen and do some things.
Yeah, it eliminates that constant monthly looking at the numbers.
Yes.
And also opens up, like I say, we've told people all along, this is your savings bank, and I feel like this is a way to pull that money out that is sitting there while staying in the house, making it what you need it to be.
Yeah, there's 12,000 seniors a day turning 65. And with that 12,000 seniors, only about 2%, a little bit less than 2%, take advantage of reverse mortgages.
Wow.
The generation that's now in their 70s, they were taught, don't touch the home, pay off the home, protect the home, right? Well, that's great. You paid it off, or you got it to a very low mortgage, but now what do you do with it? You can't buy a loaf of bread with it, right? So I always make the analogy, if you work for a company for 20, 25, 30 years and they gave you a pension, would you say no to the pension?
Right.
Right. People go, no, I wouldn't say no to that. Well, your house can be like a pension. Treat it like any other asset pool, meaning stocks, 401ks, mutual funds, your savings account. Treat it just like any other asset you have and use that strategically.
Wow.
So going back to my mom, right? My dad's got a military retirement and a postal retirement. My mom's got her Social Security. So together combined, they make right about $4,000 a month combined. Okay, that's not bad. The house is paid. The house was paid off, and they've been living. That was my home that I grew up in. So that's they've been there for 50 years, long time. So when they bought the house, it was $48,000. Now it's worth $750,000. And I said to my mom back in March of last year, I said, Mom, you need to get a reverse mortgage. Dad's got cognitive decline, right? And we had to jump through a bunch of hoops. We had to make a bunch of repairs on the house. But long story short, my mom having that reverse mortgage based on what she's going through now and what my dad went through back in November, it probably would have torpedoed the family financially, to be honest with you, if we didn't have the reverse mortgage in place.
To try to find those funds to fix the problems that have now occurred.
Fix the house, exactly. I don't know, everybody would have had to cobble together some money to make all that work, and it's just, now we can do it, and we don't have to, like you said, we can get the results we're looking for, and we don't have to be stressed.
Yeah, and I think it is such a change in how we see our options. As far as knowledge, we are in the information days. Like, this is the time of information. It is about the informed and the uninformed, and we all have access to the information. That is really what I'm basing this all on, is that I want people to get over the yet, that when they say the yet to me means that they know something is imminent, they know they should be doing something, but they don't know what it is, and that just means they don't have the information available yet. They haven't drilled down enough, asked enough questions to figure out, is it reverse mortgage? Is it home health? Is it, what are we talking about? But we stay like paralyzed in the yet. And so I just think this is a way to let people know there is an option of how we even see the equity in our home. And a lot of people think
100%.
it's I think you said 48,000 when they bought, 700 something now.
Yes.
People just think that equity is what that is, that what I've gained, and
Right.
now I have 700,000. And
Right.
this is a whole change in the thinking process of how we see the equity in our homes.
Yeah, because that unless you tap into a reverse or some other loan product, but preferably reverse, so you don't have to make a payment on it,
Right.
and get the line of credit, is you can't touch that 700,000 in equity.
Right.
You can't do anything with it. It's
Yeah,
it's
you have to sell.
valueless. Yeah, unless you sell. Right.
You're
Then you got to
selling.
move though.
That's what
Then
I
you
mean.
gotta-
Like people think that that is what it is. They see that number and they're like, okay, now what do we do with that?
Right.
And then that's a whole other conversation with capital gains taxes and all of those things.
Right.
But this is a different way to see the equity in your home, make it available to you without leaving your home.
Yeah, absolutely, 100%.
Okay.
Yep. Right.
What is another myth or something you want to clear up here that you
Well,
get a lot?
a big one, when you get a reverse mortgage, there's always lots of players at the table. And so usually sometimes it's kids, sometimes it's CPA, sometimes it's financial advisor. And based on their understanding of the reverse mortgage, because reverse mortgage is unfortunately a lot of bad actors came out of the woodwork in the 80s when reverse mortgages really kind of came into their own. And that's where most of these bad myths come from. FHA and HUD have done a lot over the last 35 years to clean all that up with the counseling, the financial assessment, the non-recourse feature. All of these things have been, brought to bear because they want to make sure it's a sustainable product and that the senior is protected. But all the negative things that occurred, it continues because of the water cooler chit-chat and, oh, I've heard it's a bad deal. I don't even know why, but I think it's a bad loan, right? And I smile every time somebody says, oh, you don't want to get a reverse, right? They don't know who I am. And I go, really? Why don't you tell me why you don't want to get a reverse, right? And I just kind of get right into it. And they're like, well, they don't know. They just know that they've heard negative things.
Yeah, and what they
Right?
think, that
That's right.
stigma from the 80s, it really has perpetuated.
Yeah. One of the biggest, so when we have all these players sitting at the table, right, and you and I both know this working with seniors and when you work with their kids, is the kids that are for the parents and the kids that are for themselves, right? So when I'm sitting down with kids, I like to share, or heirs, I like to share with them, look, if God forbid something happens to mom or dad and they no longer live in the property, this is an owner-occupied deal. That's when we have to make decisions on the home. But you get time to do that, and you have 4 options. So the heirs have got 4 options. Those options are A, they can sell the property, just like any other traditional sale, and they can collect the equity. B, they can, if they're on title, like a lot of time mom and dad will put kids on title after the fact, they can refinance onto the property because they're already on title. They have ownership, so they can refi. B or C, if they want to buy the property, they can buy the property. If they're not on title, then they can't refinance it. But if they want to buy the property, they can buy the property. And lastly, in that first example we gave where they had the property, they've had the reverse mortgage since Tom Selleck was around and all that. Well, and they're upside down. Well, they can do what's called the deed in lieu of and walk away from it. They're not on the loan. The heirs are not on the loan, right? So again, they can sell the property just like a traditional sale. They can buy it, they can refinance onto it, or they can do a deed in lieu of. But here's the silver lining for each one of those. If they decide to sell the property, not only do they get the equity, if there's equity, they also get a tax write-off of that deferred interest that's now being paid. So all those years that mom and dad had the reverse mortgage, right, that interest adds up. That's how the bank makes their money. So instead of you paying it down, the loan balance goes up. Well, if mom started at a $100,000 loan balance, and let's say 15 years from now that loan balance is now $400,000, that's deferred interest of $300,000. Well, if there's 3 of us kids, in my case there's 2 of us, up to $100,000 each, we're going to be able to write that off. Now your CPA will tell you exactly what you qualify for, but we're going to get the equity, plus we're going to get a portion of the write-off of that deferred interest that's now paid when we sell mom's house.
Wow.
So that's a silver lining. So most of the time I get the objection, oh, you're biting into the equity of the property. A little bit, but mom gets all these benefits over here. You get the equity, and by the way, here's a projection of what the equity is 10, 15, 20 years from now, but you also get this deferred interest write-off, right, based on what your CPA says you can write off, which usually means it exceeds your standard deduction, and now you get an itemized write-off for that particular year.
Gotcha.
So that's one benefit.
That's
If they
huge.
decide, That's huge, right? If they decide to buy the property, they buy the property for either the loan amount on the reverse mortgage, if that's lower, or if the value is lower. So whatever the lower of the two is, that's another consumer protection. The kids get to buy the property. They don't buy the property at market value. Let's say my mom's house is worth 1.2 million 10 years from now, and she owes 600,000 on the reverse. Just random numbers, okay? I wouldn't pay 1.2 million if I wanted to buy my mom's house. I would, if I wanted to buy it, I'd pay it all. I'd pay off the reverse mortgage at 650. Well, that's 50% loan to value. That's a good deal,
Wow.
right? So whatever's lower, either the loan amount or the value of the property, is what I pay for the property.
Okay.
Okay, and if I buy the property, and the loan amount and the value of the property is lower, I always pay 5% less. I pay 95% or whatever the appraised value is when I buy it, when there's a reverse mortgage on it. As an heir, that's right. If I refinance,
95%.
it's a nice break. And also, again, in that example where the property was $400,000 of the reverse mortgage balance was that high, the value of the property was $200,000, it was upside down. If I want to buy that house, I don't have to pay back the delta, right? I don't have to pay that extra $200,000 that's owed. And I buy that house for not $200,000, I buy it for 95% of that. So I'd buy the house for $190,000. So that's one heck of a consumer protection for the heirs that's put into it, right? That's why I say it puts a moat around the heirs, the borrower, and the house.
Wow.
So that's
Yeah, you're adding to that moat for sure.
right.
That protection. If you are listening and your ears are up, you
Oh yeah.
had no clue that all these protections and guidelines were in place. Like you say, I love that, the moat around the house, your parents and the heirs.
Yep.
So if there's anything else in the myth category, misconceptions that you want to
Yeah.
touch on.
Yeah, the other one too is spouses. So, for example, you've got my mom and dad; they're 10 years difference. Well, if you'd have went back 20 years, my dad was 68, mom was 57. Well, my mom doesn't qualify for the reverse at 20 years ago because she was only, again, 57 years of age. You got to be 62. However, HUD and FHA recognize that occurs a lot. You have either a male or a female spouse that's 15, 20 years, 10 years, whatever it is, and they're not of qualifying age, 62 and above. So it's called an eligible non-borrowing spouse. And so, for example, somebody's 70, their spouse is 55. Okay? We can do that loan. They can get a reverse mortgage, but we're going to qualify them based on the youngest person's age. So in this case, 55 years of age, because that person is going to live longer, right? So they're expected to be in the house. But bottom line, as long as they're married as that younger spouse to the older spouse who qualifies for the reverse mortgage, as long as they're married at the time they get the reverse mortgage, they stay married during the reverse mortgage, and that's their owner-occupied home. And after that older spouse either passes or moves into a full-time care community, they're protected under the consumer protections of the reverse mortgage, and they themselves can live in that property in perpetuity.
Oh.
So let's put this in terms of you and your husband. I don't know your husband's name, but let's pretend he's 15 years older than you, okay? And let's say that he is 70 and you're 55. If you got a reverse mortgage, we would do the math based on your name, or excuse me, based on your age. Your husband would be the borrower on the loan, but you're the eligible non-borrowing spouse. Fast forward 25 years. Now at the age he was 70, now he's 95. Okay, now you are 80. Okay, something happens to him. You can live in the house in perpetuity and never have to make a payment on that reverse mortgage. Ever, ever, ever. All you have to do is make sure you pay your taxes and your insurance,
Okay.
like you would any other time.
Those are the two big buckets there.
Yeah, those are the two big buckets: taxes, insurance, and HOA. HOA we know can be a bear sometimes, right? HOA can be a bear, and then you've got the what they call the cost of living inside the home itself. So it's basically square footage times a formula, which is 14 cents a square foot. And then the other bucket in that financial assessment is, can they pay the current debts on their credit report? It's not a FICO score driven program. We don't want to know your FICO score. That's not what we pull your credit for. But if you've got a car payment, you've got some credit card debts, they want to make sure you can pay your current debts on your credit report, the minimum payments, the cost of living to live in the property, okay, and then also the HOA taxes and the insurance. You can cover those buckets. If you can cover those buckets, you're in good shape. You're in really good shape, right?
the goal is that you don't want to do this and not be able to maintain your home, and then there's a bunch of deferred maintenance. I mean, you're doing this
Right.
to help take care of the home.
Right.
Are there limitations? Is there any kind of checks and balance on what people can use the money for?
So in terms of what they use the money for, no, there are no checks and balances. And so I say that a reverse mortgage is good for lifestyle, plan, or need, right? So a lot of baby boomers, what's a very definitive thing about baby boomers 65 and above? It's they want to maintain their lifestyle, right?
Yeah.
So if you go down to the villages, you'll see that in Florida, right? They want to maintain their lifestyle. So they're not afraid to dip into their home equity. So we're going to see reverse mortgages, increase as these baby boomers come to age and they start recognizing the advantages of it.
Yeah.
So there's lifestyle, there's need, and there's plan. But in terms of the actual line of credit, like my mom, she got $300,000 as a round number. She could get access to about 60% of that year one. They limit 60% because they don't want you to go spend it all year one. Now she could put the money into anything she wants. That's another consumer protection, right? They limit first year access. If my mom doesn't touch it year one, then by the end of year one, she gets access to 100%.
Oh.
Okay? And the reason why they put that in place as a first year limitation is back in the day when reverse mortgages got the bad rap, you had that senior pulling out $100,000, which was their entire line of credit, right? And taking it down to the casino or giving it to a financial advisor or giving it to somebody and it was gone,
And it's
right?
gone. Yeah.
So that's why they limit first year availability of the funds and the distribution to roughly about 60%. And as you get older, you get access to more of that, right? So it's as you get older, because it's all based on life insurance tables and what life expectancy is and all of that. But yeah, no, it's again, the consumer protections that are in place as we talk about it and the consumer protections unfold. People go, wow, I had no idea. I had no idea it was that kind of product.
Yeah. Is there anything, state by state that changes?
The FHA reverse mortgage product, no, because it's an FHA-driven product, right?
Okay.
And that what they have also done is they have one maximum claim amount. Like FHA is usually by county, right, in terms of FHA loan limits. For a FHA reverse mortgage, it's nationwide. So that's what we call the max claim amount across the entire country. So it doesn't change by county. So that's another consumer protection that we've built into it.
Okay.
Okay. And one of the things I'd like to say that you mentioned earlier, without saying it directly, is that one of the myths or misunderstandings about reverse mortgages is that it's a loan of last resort, and it's a loan for the desperate. And let's go back to my mom. If my mom didn't have my sister living in San Diego, I'm up here in Sacramento, so I'm about a 10-hour drive, right? If my sister wasn't there, and if I didn't have the knowledge and the skills and the resources associated with the reverse mortgage side, my mom wouldn't have got the reverse mortgage. And here she'd be living in a house that didn't have the roof repairs that we did. It wouldn't have had the dry rot fixed. It wouldn't have had the mold in the upstairs bedroom where the leaky roof was coming through. She then wouldn't have the line of credit now. And oh, by the way, something I didn't mention, because she had so much equity and so much a large line of credit, we did what's called a LISA, or a life expectancy set aside. And that life expectancy set aside pays her taxes and her insurance for the next 15 years. So my mom doesn't have to worry about her taxes and insurance. It takes it right out of the line of credit. She doesn't have to worry about it. It's just like having an impound account. And now not every senior with a reverse mortgage will qualify because their line of credit may not be there. Or they may elect to, I'll pay my own taxes, right? But my mom, I said, Mom, look, let's get all this done so that you don't have to worry about it. But this life expectancy set aside covers her taxes and her insurance from her line of credit, which means her monthly cash flow increases a little bit because you don't have to worry about that biannual payment that she has to make. In California, it's pretty high, right, based on the value of her home. And that's taken care of. It saved her about $2,200 a year.
Wow.
Yeah.
Wow.
So we've set my mom up right. So going back to some people say it's a line of last resort, it's a loan for the desperate. I say, you know what? Yeah, if you wait too long, you probably are desperate. And you may not get it. Because your house may be in such a bad spot, you don't have the necessary funds to fix the house.
Right.
You may not have the cognitive ability to get through the reverse mortgage counseling that's required, right? So I like to look at reverse mortgages.
Things get so far gone.
Yeah.
That then there are not options. People wait and wait and wait and wait.
Yes.
And then by the time they have to do something, the scenario that they were fearing all along is now their only option.
Yeah,
And
that's right.
that's a hard place to be, because for forever they're thinking, I don't want that, and I'm just going to delay it, and then when things happen and then decisions have to be made, a lot of times it's sad that that is then now the option that they have before them. So
Right.
that's what I'm trying to get people to do is, I call it the future you, and I want people to continue to have agency for themselves. You can still plan for the future you.
My mom's and dad, they are a test case example of why a reverse mortgage can be, for a lot of borrowers, so important. And it's not just for those that, my mom and dad never made a ton of money, but they lived, they paid off their house and they lived in the same house, they still do, for 50 years. And a lot of people don't do that, but they did. And, so they're going to reap the benefits of that. But, for borrowers that have got $1 million or $2 million of assets under management, or for somebody who's going through a divorce, or somebody who wants to downsize, right? Reverse mortgages can be an excellent tool, right? And matter of fact, I'm meeting with one of my best referral partners is a financial advisor, and she gets it. I'm meeting with her tomorrow because, again, you could have $1 million of assets under management, but you could use a reverse mortgage strategically to help manage those assets, right? And I can geek out and talk about that, but I won't do it on this show. But you can,
That's the next
right?
layer.
That's the next layer, right? That's the
Yeah.
next layer. Maybe your listeners want to hear about that. And we can talk specifically about that the next show,
Yeah. Part 2 with Michael Pankow.
Perfect. Let's do it. I love it. And, so there's lots of reasons. But again, a reverse mortgage is an insurance policy. You can't get medical coverage if you've already went out and gotten the car accident and now you're in traction in the emergency room. You can't get it. You can't get car insurance for the car accident you just had if you don't have it before that. So the reverse mortgage, like my mom did, she got it right in the nick of time, right? She really did. She got it right in the nick of time. And because my sister and I were able to get her through that. And if we weren't around, she wouldn't have got it. Just wouldn't have happened. So
Yeah.
get it
And
while you
that's the
can.
timing, right? The timing of
Yes.
life. And it's being that proactive for your future you. We have to have an acknowledgement of, I don't know what is going to happen, and how can I set up not only my family, but myself, my home. What steps can I take right now to put a more preventive plan in place? Set it beautifully. The options that you had prior to an event, once that event happens, they're not available to you anymore.
They're not.
We don't have to be reactive. We can be proactive and get
Yeah.
the information for your family, whatever that looks like, to know these are options, which one makes the best sense. And I always say these conversations are not events. They're not, we're going to sit down and figure this out when I go visit next week, It's
Yeah.
not going to happen that way. The decision-making process is a process. And it's planting seeds, figuring out. We have to be open to having those conversations with our loved ones. And I know every family is different, but at the same time, if we can have these things in place to avoid that, we have this
Yes.
concept of, we're not supposed to do anything until we pass away, and then everything's left in a will or a trust, and that's how it's done.
Yes.
And that really doesn't have to be. You can bless your family now, and watch how it changes their family, and get to enjoy that. But we
Yeah.
have to have conversations about it in order to even know what those options are that exist. Hopefully people are starting to go, hey, this may be an option for us. What do we do next? So what do they do next?
Yeah. Well, of course, they can always reach out to me and ask me any questions they'd like. I think you're going to provide that for your listeners,
Absolutely.
right, in the show notes.
Yep.
And, the number one catalyst, and you know this as well, is the number one catalyst that start a medical emergency or an emergency in the family is a fall. And that is true of my family. My dad took a fall last year. He ended up in the hospital. The day I left the NAR event in Los Angeles, he took a fall and he ended up in the VA hospital for 5 days. That put him in a walker. Then my mom this year, the week before Christmas, she broke her left femur, put her in Kaiser down in San Diego. Matter of fact, my mom was in the same hospital as my dad. Different floor, but same hospital. So I was like, I know where that's at. I'll be there in a day. And then she ended up in a skilled nursing home facility, and then she was there for way too short a time, and we know how that works as well. So now my mom's at home. She can't bear any weight on that leg. And so where I'm going with this is that, I like how you put it, we're here today, so the future you exists. And, a senior in many cases, is one fall or one medical emergency away from disaster. And if the home isn't set up right, either universal design or it's made some changes, right, to accommodate the future you. I love the future you thing. I'm going to use that.
Oh.
To accommodate the future you, that's one issue. But if the future you has a fall today, that you end up in the hospital for whatever reasons, and now your life has, because my mom and dad's life has changed. With their 2 falls, their life changed. Completely, 100%. Now my sister's there every day. My sister's son is there every other day. Now we have somebody coming in, right? And it's like, wow. And I feel bad. I'm going down in 2 weeks. I can't go down all the time. I'm 500 miles away. But the future you, in some cases, could really benefit from a reverse mortgage because of the consumer protections, the cash flow that it will give you back, and or to the line of credit like it did my mom, the line of credit that it can provide you with. It's tax-free, and you can use it for whatever you want with no obligations to tell them what you're going to use it for. And then also, there's no payment required on it. Ever, 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 until you pass or your heirs take it over. And again, all the consumer protections we talked about with the kids and the heirs. So I'd love to talk to any of your listeners that have any questions. Love to answer their questions and, hopefully, get them in a better spot with their, especially that sandwich generation. I mean, I'm that generation, you're that generation. Mm-hmm. And I've still got kids at home, and I've got kids that are out of the house, and I've got a mom and dad now that are restricted to the house. Mm-hmm. And they're 500 miles away. So it's a unique place to be in, for sure.
And that is, and I find that, I think we were part of that generation that started moving away from home a lot.
Yes.
When I left in '93, it was like, I knew no one was going to do it. It landed me in different parts of the country, and when you're, an equivalent of a day's drive at least to get back
Mm-hmm.
to your loved one, that can be a burden in itself for the adult kids not being there.
Yeah.
And then the results
Right.
of those ifs and whens.
Thank you for asking me on.
Thank you so much. Appreciate all of your knowledge. You are a wealth of information. And yes, anyone that has any questions on reverse mortgage, please reach out to Michael. Michael, do you want to give a phone number or anything that if people are just in their car want to scribble it down?
Sure. Yeah, I think the best way to get a hold of me is probably my cell phone. If you want to text me, text is probably the best way to go because we get lots of spam calls every day, unfortunately. But texting me is 916-296-7765. That's 916-296-7765.
All right. Well,
That's
Michael, I hope you have a wonderful day.
You too.
Thanks again. And we will talk soon and maybe look at a part 2.
Sounds good. Okay. Thanks, Lisa.
Thanks for joining me on Not Ready Yet, Curating Conversations for the Aging Journey. If something in this episode gave you clarity or the courage to start an important conversation, or offered a new way to look at things, I hope you'll share it with someone who might need the same encouragement. Remember, navigating aging isn't something we have to do alone or in crisis. With love, logic, and the right tools, we can face what's next with confidence and connection. Be sure to follow or subscribe so you never miss an episode. And if you're feeling generous, leave a review. It helps others find the show. And just a quick note, the information shared on this podcast is for educational and informational purposes only. It is not intended as a substitute for medical, psychiatric, legal, or other professional advice. Always consult a qualified professional for guidance tailored to your unique situation. This is Lisa Harper, and I'll see you in the next episode. Bye for now.